very good afternoon and welcome to your stocks coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in. Market's a bit of a red is what we're seeing coming in on the screens. The Nifty is, actually very flat. Now a bit of a negative bias that we're seeing coming in for the Nifty 50. The sensex is just managing to hold on to some bit of a gain, but yes, off the day's highest point and 127 points down there. 331 points of the day's highest point is what we're seeing for the sensex as well. So clearly the sensex and the Nifty also have seen that fall coming in from the day's high and trading almost in the day's lowest point. What we're watching out for in terms of the broader markets as well, that is not performing well. Look at the midcap. That's seeing clear pressure coming in. Day's low for the Nifty midcap, but that is down almost 1% right now, and from the day's high it's down almost 1.6%. Even the small cap is seeing a sharper fall as well, much sharper fall, 2.2% down from the day's highest point. 1% overall decline as of now is what is coming in for the Nifty small cap. So clearly we're seeing some bit of a pressure that's coming on the screens for the markets today. Not much of an excitement there, but this is a show this is a show to solve all your stock related queries, and that's what we'll be doing in the next 30 minutes. We have our experts for today, Ashish Kyal, market technician as well as author at Wave Strategy Advisors, as well as Gaurang, Shah, Senior Vice President, Geojit Financial Services, joining in with us on the show to talk to us about the important queries that you all have sent us today. So Ashish as well as Gaurang, thank you so much as always for joining in with us on the show, and good afternoon to both of you all. Let's get started with the queries as well, because markets, there's nothing that to say much about because we've spoken about levels as well last week, and that's what we're keeping an eye out on. But in terms of queries, we have a whole host of them. This first one is coming in today is from Jyoti Kalra, who's writing to us from Punjab. She's holding 50 shares of ONGC and this is at a price of 200 rupees per share. She wants to know whether to hold or sell at the current levels. Gaurang, what's your view coming in on ONGC overall?
Thank you, Vinny, for having me on the show, and good afternoon to all of you all. So, prudent to give a disclosure. We have a fundamental coverage on ONGC. What has happened today on ONGC is thanks to the crude oil prices. And there was some reports that I was reading in the morning that crude oil prices should possibly head down south. Somewhere close to about $70–$75 is the view that crude oil prices should come down to. In that kind of a scenario, oil exploration companies do have a short to medium term overhang, but from a long term point of view, we are positive on ONGC.
Okay, positive on ONGC. That's a word coming in from Gaurang. Ashish, on the charts and technicals, what's your word coming in for ONGC today? Clearly, it's one of those companies which are putting some bit of a pressure overall also on the markets, down 3%. Last 6 months also, when you're looking at it in terms of charts, it's not been anything exciting, right? So what should the viewer now do with it? Should they continue to hold at these 200 levels or maybe look to sell?
Yes, I would recommend a hold, given that the stock has already corrected from 325 levels, made a low around 215. There was some attempt of a pullback, but right now we are seeing some selling pressure. So I think 215, 218 is a very important level. Also, the low which was formed on 4th of June on the election day was also near around this area. So I think 210, as long as it is intact, continue to hold on to the stock here over short term. Yes, there can be some pressure, but eventually the stock should move up towards the level of 250 and try to increase your time horizon to at least a year and a half so that you can possibly see some kind of a positive reversal after the base formation happens here.
Okay, let's move on and talk about the next stock that we have coming in is JSW Steel. This is the query coming in from Kunal, who's writing to us from New Delhi. He's holding 60 shares of JSW Steel. This is at a price of 970 rupees per share. So they're making some bit of a profit on this one. Wants to know whether he should continue to hold or look to sell at the current levels. Also, we had, I believe, some brokerage notes also had come in for the steel sector as well, where Jefferies, I think, is maintaining a buy rating on this overall metal space. Today, metals is also managing to hold on to decent gains. So what are we watching out for, Gaurang, from JSW Steel?
So, Vinay, there are two things for the metal pack. One is positive, and other one is an overhang. The positive news flow was last week we heard stimulus in China. And before that, US tariffs on aluminium, on certain aluminium and steel products. That is a short to medium term overhang. On the domestic side, we are extremely positive on the metal pack. Consumption is likely to go up with spending both at the center and state level. Our view is also that there would be a slight upward revision of flat and long products. On JSW Steel, as a disclosure, we have a coverage, and I would say that, hold on to it. The only thing, Vinny, the investor needs to do is extend the time horizon.
Okay, so extend some bit of your timeline. That's the word coming in from Gaurang. Ashish, on the charts and technicals for JSW Steel, what is your view? Last 6 months, the stock has seen just a muted move of around 8%. Though in the last 1 month, a couple of months, at least since Jan, we've seen that uptick coming in for the stock, right? So do you think this up move is going to continue? And do you agree with Jefferies also? Because they are also saying, and they believe that this metal pack is something that could outperform.
Yes, indeed, Vinny. If you look at the metal pack, it is already outperforming, where you can clearly see since Jan onwards, where the broader markets have corrected so much. If you look at JSW Steel or Tata Steel or other metal stocks, most of them has not shown very deep correction. JSW Steel, rather its 52-week high is around the levels of 1,060, 63, and it is already at 1,020. So that shows relative outperformance. So I would continue to suggest a hold for sure here. On the downside, important support for the stock is around 950 levels. And we can expect the stock to reach toward the level of 1,200 or even higher once the broader market stabilizes.
Okay, let's move on to the next query for today. We have Rupesh, who's writing to us from Pune, holding 275 shares of Zomato. Average price is 240 rupees per share, making some bit of a loss. The stock is currently trading at 213 rupees per share. Wants to know the outlook for Zomato in the medium to long term as well, and whether they should continue to hold or look to sell this one now. Gaurang, your view first.
Well, so quick commerce is going to heat up, Vinny, with the new entrants coming in. But Zomato has been in this business for a pretty long time. During the IPO, we had covered it with a subscription note. And post that, we have a standalone recommendation from a long-term point of view on Zomato. Maybe short-term, medium-term, because of the competition coming into quick commerce, you may see a little bit of pressure, but long-term definitely hold on.
Okay, hold on for the long term. That's your view coming in. Ashish, your view on Zomato as well, because the viewer, my only concern is because the viewer has bought it on the higher end side, right? 240 is what they've bought it at. So what would your view be on the technical front for this one?
See, Zomato is consolidating over short term in a very broad range of around 205 and 240, where possibly the user has bought, and it is forming a triangle kind of a pattern. And in this kind of a stock, getting towards 240 is not a big deal because it moves very sharp, very fast once the trend changes. My suggestion is continue to hold on. If it's a short-term trading that he's looking at, then maintain a stop loss of 204 on the downside. And once the stock manages to cross 230, there can be a very sharp up move towards 270 levels also. So hold with a stop loss of 204 from the short-term perspective. And eventually, if he is looking to hold it from a year or 2 years perspective, then I think this stock is just correcting over a short-term for 38.2% retracement. And then it might start showing a good up move. So hold is a recommendation, both short-term and medium-term perspective.
Okay, surely keeping an eye out on that. Just a quick check that I want to just make on the market front. We're seeing the flashes at the bottom of your screen where article team just flashed about how the futures in the US also are seeing a bit of a fall, and a red start is indicated, whether the Dow futures down more than 250 points is what it's indicating. So some bit of a pressure is what we're expecting with there as well. We've seen that Nifty and Sensex also are trading almost near the day's lowest point. On that front, let's keep it going with the next query then. And we have this one coming in from Ravi Sastry, who's writing to us from Chennai. 500 shares of ACC is what they're holding at a price of 2,300 rupees per share. Wants to know whether to stay invested in this one, look to exit, or look to average. Gaurang, your view?
Well, this is also one of the sectors which is likely to perform well, that is cement, Vinny. And there is a lot of consolidation that has happened over the last couple of years. Smaller players getting acquired by large players. ACC, again, a disclosure, we have a fundamental coverage. Acquisition price is a little bit higher. In case if the investor has investable amount, then I would recommend an averaging also at that.
Okay. And Ashish, your view for ACC, what should the viewer do?
Continue to hold on ACC. It has a very important support, which is at the levels of around 117.85. So 117.85 is an important support. As long as that is intact, I would suggest continue to hold, but do not be in a rush to get out of the stock just because it keeps falling, because the broader market, there is a systematic sell-off. And once it starts recovering, we can expect it to move towards the level of 2250 on the upside over medium term. So overall trend for ACC over short term is downside. But we can expect it to remain buoyant above 1785. So hold is the recommendation.
Okay, hold is the recommendation coming in from Ashish on ACC. But on that note, we're going to slip into a very short break. But here's a quick note for our viewers. Parity isn't just a goal. It is the key to unlocking new possibilities. HSBC presents CNBC-TV18 Future Female Forward Mega Summit, co-presented by Cognizant, where we discuss what it takes to close the gender gap and create lasting impact. Tune in for this game-changing dialogue live today on CNBC TV18, 5:30 p.m. onwards. Welcome back. Thanks for staying tuned into your stocks on CNBC TV18. We still have with us Ashish Kyal as well as Gaurang Shah, who are solving all your stock-related doubts. Let's keep it going with the queries then. And the next one is on Inox Wind. We have Umesh Thadani, who's writing to us from New Delhi. He's holding 30 shares of Inox Wind, which is at a price of 175 rupees. Currently, the stock is trading at 167. So not much of a loss there, but some bit of a loss there. Overall, long-term outlook on the stock is what they want to know. Gaurang, your view on the fundamentals for this one?
I'll give it a pass. We don't have coverage on it.
Okay, sure. And Ashish, on the technical front, what should the viewer keep an eye out on if they have a long-term outlook for the stock?
See, if you look at Inox Wind, the stock actually formed a double bottom around the range of 137. We have seen some smart recovery from those levels. It has a major hurdle around 175, from where there is a rejection even today. So I would advise continue to hold on to the stock here. 175, if it's broken, then we can have a pattern target of 200 or possibly higher. On the downside, maintain a stop loss for the stock, which is around 157. So trade this stock from a short-term perspective. Above 175, 200 is the target, and maintain a stop loss of 157.
Okay, keep an eye on those levels over there for Inox Wind. Let's move on. Kaynes Technology is the next query which we have coming in on. And this is from K. Narayan Reddy, who's writing to us from Warangal, holding 40 shares of Kaynes Tech. Price is 5,000 rupees, making some bit of a loss here because the stock is at 4,300 approximately. Wants to know what should he do if he should continue to stay invested in this one. Gaurang, your view coming in on these EMS players, and specifically Kaynes also had done well, performed well, and we've seen the stock also run up. So, Kaynes Technology, what should the viewer do now?
Well, I won't give a buy, sell and hold, Vinny, because we don't have coverage. But the sector was, as you rightly mentioned, companies like Kaynes Technology, Dixon Technologies, they were buzzing because of the obvious reasons in the news flow. Along with that, government policies, again supportive. A very strong player in its field. Unfortunately, since we don't have a coverage, I won't give a buy, sell and hold.
Okay, sure. And Ashish, your view coming in on Kaynes Technology, last 6 months, and specifically actually since Jan, we have seen that fall coming in for the stock, and there is no stopping because every day we're seeing a new decline and a new fall coming in for the stock. So Kaynes Technology, what should the viewer do? Because they bought it at 5,000. And, since Jan, from those 7,500 levels, today it's at 4,300. Is there still some more downside that we are watching out for?
See, if you look at Kaynes, I think the stock started correcting from the levels of 7,800 rather in the Jan, and it has already fallen towards 4,000. It has shown some kind of a recovery from 4,000. It's attempting to go up, but it's not able to do that in a very smart way. So overall, I would suggest that continue to hold on, maintain a strict stop loss of 4,000. In case that is breached, then further downside can resume. And then expect it to go towards the level of 5,000. So its cost price is not very far away, but as of now, hold it with 4,000 as a stop loss and 5,000 as the target.
Okay. The next query for today then, and this is coming in from S. Chandra, writing to us from Kolkata, holding 1,200 shares of ESAF Small Finance Bank, 52 rupees. What is the prospect of her investments in this stock? Gaurang, any view on this one, right? Some of these small finance banks particularly are a bit wary and everyone is just keeping an eye out on them closely. But fundamentally, what are you looking out for here?
The problem with small finance banks has been with respect to the MFI segment and the asset quality issues. ESAF small finance, we don't have coverage, but we have coverage on two other small finance companies, and that is Equitas Small Finance and ONGC Small Finance. The asset quality issue will take time to improve from here on, but our sense is that the worst is, with respect to the asset quality, the worst is behind us. Again, since we don't have coverage on ESAF, so I won't give a buy, sell and hold, but we like the sector. We have coverage on Equitas and ONGC Small Finance.
Okay. So you have coverage on the other two names, Ujjivan as well as Equitas, is what you're saying. What is your view on this one, Ashish? ESAF Small Finance Bank, viewers obviously bought it at 52. Currently, the stock is just at around 29. Time to exit and maybe switch to some of these other banks. What is your view?
Yes, I would do that. I recommend that for sure because the stock has been correcting from 80. It is now at 30 and there is absolutely no buying interest that we can clearly see here. So the overall trend for ESAF is on the downside. It's best to be out from this, not to keep such kind of stocks. The volumes are erratic. And I would rather recommend to be in the other space, maybe NBFC if someone is looking to invest into maybe Bajaj Finance or something like that. So that there is an outperformance, the cushion is there on the downside. So it's better to be switching out from this stock and invest into Bajaj Finance.
Okay. That's a view coming in from Ashish as well. Maybe switch out of this one is the view from both our experts today. Let's move on to this one, and this is from Dhruv Kapoor. The next query from Haryana, holding 30 shares of ITC at a price of 200 rupees per share, making good profit, right? His investment surely has doubled in terms of returns that he's getting. So he wants to know if he can buy more of these shares or what should they do? Actually, the view query is only to buy more shares for ITC. Gaurang, your view on this one? Value unlocking for hotels is surely done, but view for ITC?
Yeah, I mean, the entire sector is likely to do well, especially post the comments made by the Honorable Finance Minister in the budget. Vinny, our sense at Geojit is that the FMCG uptick consumption basically related uptick will start being visible post third quarter, this new financial year starting 1st April 2025. Targets, if you ask me, I think if I'm not mistaken, 520, 530 is the target from a long-term point of view. His question whether he should add more, I would definitely recommend that.
Okay. Recommend to add more is also there. So yes, Dhruv, you can add more. At least that's the word coming in from Gaurang. Ashish, would you concur with Gaurang's view as well? And what level should the viewer, look to add more as well on the technical front? Are we expecting some bit of a correction where the viewer can get this at a lesser price?
No, I would agree with Gaurang completely because the stock has already corrected from the levels of 470, now at 400. And addition can be done at the current levels. And also one more thing, he has been riding all the way from 200 to 400. It's not very often to see clients riding all this way, and it's best to continue to hold on to this stock. There is also a short-term time cycle which reverses on the upside by the end of this March. So I'm optimistic ITC should start outperforming from April onwards. So continue to nibble around this stock. If you want to have it more in your portfolio, then you can do that. On the downside, the important support for the stock over short term comes to around 389, which I think should remain protected. And on the upside, 420 is an immediate hurdle. And if that is crossed, the up move can start resuming here.
That's a word coming in for ITC. Surely, Dhruv, you can add more of ITC as well. And this time also, the levels are also fine. You can add them at these levels as well. Let's move on to the next query. This is actually an investment query that we have coming in from Ritu Srivastava, who's writing to us from New Delhi. Well, I think she wants to know whether it's a good time to invest in mid and small cap stocks. Very general query. So, Gaurang, mid and small cap stocks, what's your view coming in on this one? And it's so generic, so I would ask you that if anything specific that you're looking at in a mid cap name, what would that stock be also right now?
Well, Vinny, so, our sense is that there should be some more pressure on the downside as far as the small cap universe is concerned. In the mid cap, after the correction, we feel that sector-specific ideas should definitely be kept in mind. If I have to name one or two mid-cap ideas, then in the hospitality sector, we are positive on Indian hotels. That's the name we like. And of course, the hospitality sector is likely to witness one more uptick in terms of tariff revision of 15%. That's what the industry is talking about. The other one would be, again, a mid-cap idea from IT sector. KPIT Tech or Cyient Limited, both of them, small to mid-cap category, should definitely be looked at. But my humble request is that please do your homework before investing in either small or mid-cap.
Okay. And Ashish, you have any names that on the mid-cap space that the viewer could watch out for, a quick one?
Yes, if you look at, one thing I would like to recommend is that if you want to invest into mid-cap and small-cap, be ready for the volatility in this year, because we have clearly seen a lot of movement on the downside where the stocks have corrected very sharply also to the extent of 40 and 60%. But having said that, I think one of the stocks that can outperform in the mid-cap is Blue Star. You can clearly see a very strong performance over the past few months. So Blue Star is something that I would recommend user can look forward to invest into.
Okay, you have names coming in there as well, the viewer. Thank you so much for sending us your queries. Thank you so much, Gaurang, as well as Ashish, for joining in with us on the show. And with that, it's a wrap on this edition of Your Stocks on CNBC-TV18. Thank you so much for tuning in. Up next, Closing Bell.